So today we're looking at stock market order types. We're going to be talking about some key takeaways as well as some potential downsides to each of these different order types. Now, as we go through these different order types, we're also going to be on our desktop so I can show you in real time how these all play out for you. All right, so we hopped over here on the desktop so we can follow along step by step as we go through this. I'm currently using Robinhood, but most brokerages are going to be very similar in their style of how these market orders are going to work for you. Now, this is no recommendation, but we're going to go into our SoFi holdings over here. All right, so the first order type is going to be what they call a market order. Sometimes it might just be called a buy order as well. You can see over here with Robinhood, that's what it's called here. Now, you can think of a market order as the simplest and quickest way to actually be able to buy and sell a stock. When you place a market order, you're essentially saying, I want to buy this or sell this stock right now at the best available price. Now, the key takeaway for this is going to be speed and certainty of execution, which are going to be the major priorities. Now, some of the downsides here are going to be the fact that you will not get the exact price you're hoping for, as the market price can fluctuate between the time that your order has been placed and when it is actually filled. This is especially true for volatile stocks during periods of time of high trading volume. So let's go ahead and just show you what this is going to look like here for you. So I'm going to wipe this all clean. So right now we're in our buy order or market order. It's going to ask us how we want to buy in. Currently with this option, it lets us buy in dollars, but sometimes it's only going to give us options for shares. So depending on the company, we can do fractional shares here on Robinhood. And so we're going to go ahead and just do dollars, for example. Now, it's going to ask you how much you like to buy. And for example, we're going to do $10, and it's going to let us know what the estimated quantity is for this. We're going to click on review order. And then from here, you can go ahead and click on buy, and then you will have a market order go through. If you are doing this during market open, this will go through pretty instantaneously for you. If you're doing this off market hours, then it'll actually be pending for the next opening market time. Now, next up here is going to be with a limit order. Now, we went ahead and switched over the order type to that limit. Now, a limit order gives you more control over the price at which your trade will be executed. When you place a limit order to buy, you specifically have a maximum price that you're willing to pay. Your order will only be filled if the stock price reaches or goes below the limit price. And then when you go to place a limit order to sell, you specify the minimum price you are willing to accept. Your order will only be filled if the stock price reaches or goes above your limit price. Now, the biggest takeaway for this one is price control. You get to actually have your control on the price. So when you're buying, you can set the highest that you're willing to pay, and you can also set the lowest you're willing to sell for when it comes to selling. Now, some potential downside for this, of course, is that there is no guarantee that your order will be filled. And if a stock price never reaches your limit price, your order will remain unexecuted. So let's go ahead and show you what this kind of looks like here for you. Clear that all up. So we're currently on that order type. Now, right here, because we are buying, we want to say, hey, how much are we willing to buy this stock for? So let's just say right now, you can see down here, the stock is around this price range over here, which is $11.85. So that's kind of the last price. So let's say I'm not willing to pay more than $11 for this stock. And it's going to ask us how many shares we want to purchase on this one. So let's go ahead and say we want to do 5 shares of this company. Now you can see down here, the estimated cost is now at $55. And then for this example, and not every brokerage will have this, but you can actually choose your trading hours. So right now it's set to market hours. It'll tell you the time frame. There's extended, and now there are some companies that will allow you to do 24-hour markets. This will depend on the brokerage and the stock that you are wanting to purchase. Now, for example, we're just going to keep it at market hours, and then it lets you choose how long you want this to go for. So we talked about earlier with some of the downsides is that this might not go through. But what's a really nice thing is you can have up to 90 days for this to stay in. So you could say, hey, I want this to go until July 22nd, or when that price hits $11 or less for me to go ahead and buy this SoFi stock. But if you're saying, hey, I just want it for today, then you can just leave it for expiring that closing of the market. Now from here, if everything looks good, just like before, you can click on review order, and then you can click on buy. Now next up here is going to be the stop loss order. Now a stop loss order is primarily used to limit potential losses on a stock you already own. You set a stop price. If the stock price falls to or below this stop price, your stop loss order is triggered and automatically converts into a market order to sell your shares. So kind of like we talked about earlier with a market order, kind of just goes through. So a big takeaway for this is it's designed to protect your profits and limit the losses by selling if the price moves against you. So if the price goes down, and I'll show you how that's going to look like. And something important to note as well too is once the stop price hits, it becomes a market order so that the actual selling price might be slightly slightly lower than what you're hoping for, especially if it's a fast moving market or if, again, it's very volatile. Now let's go ahead and show you what this is going to look like. So again, we're here with our SoFi stock, right? And we want to have a stop price, let's say of $9. Right? And then we want to sell how many shares? Let's say 100 shares because we have a total of 400 with this company. Now, just like before, we can actually choose to have it either for the day or up until a certain time frame so we can protect ourselves for a couple of months here. So we could say, hey, if this hits under $9, it will convert to a market order to go ahead and sell as quickly as possible, which means by the time it gets triggered, maybe it's falling from $9 to $8.75 within just a few moments. It'll sell as quickly as possible, so it might be at $8.75. But again, that's the advantage of actually having this, that you can make sure that if it hits that number, you're protected to be able to sell and potentially make that money that you're wanting to hold on to. So again, if everything here looks good, you can click on review order and then you can click on sell. All right, so next up here is going to be with the stop limit order. Now, stop limit order kind of combines both of the features of a stop loss and a limit order. So you can actually set two prices. One that's going to be a stop price where it's going to be like, yo, hey, pay attention to me. And then the next thing is going to have a limit price. And I'll show you how that's going to look like here for you. Now, the key takeaway is this offers a lot more of a price control than a simple stop loss does. And some of the potential downsides is just like a regular limit order, there are no guarantees of execution. So this might not go through if it doesn't ever go to that price point. So it's just something to keep in mind. All right, so for this example here, let's just say our stop price is going to be at $10. And then the limit price here is going to be $9.25. And we want to, again, sell 100 shares. And again, just like before, we want to choose, do we want it just for the day or do we want it good for 90 days? Now, what this stop loss order says is, hey, when it hits at $10, go ahead and create a limit price for $9.25. Now, you might be considering like, why wouldn't I just have a limit price of $9.25? This just really depends on your methods and what you want to do when it comes to making sure certain dollar amounts might hit depending on what's happening in the market. And if it dips under a certain price point, maybe you're considering to go ahead and sell. And again, these are just different options based off of what people want to do. If everything here looks good, you can click on review and then it'll just give you that quick review and you can click on sell. Now, next up here on this order type is going to be the trailing stop order. Now, this is probably going to be my favorite one, especially on the sell side, but this also does, of course, work on the buy side. Now, the trailing stop order is more of a dynamic type of stop loss order. Instead of just actually setting a fixed price, you kind of set this trailing amount that says, hey, depending on whether you want to do by percentage or by dollar amount, I want to go ahead and activate a certain price point to sell or again, buy. So the biggest takeaway for this one is that it allows you to lock in profits as the stock continues to increase and also provides some downside protection. Now, something important to note is like a regular stop loss, once triggered, it becomes a market order. So the execution price might actually vary. So let's go ahead and give you a example for this. So now in this one, you can actually see there are two new sections here. There are the trail type and the trail, it says percentage, but you can actually go ahead and toggle this between percentage and amount, and this will also change by dollar amount. So I'll give you an example here for our sell section, but again, you can also do this in buy. You could say that if this goes up 25%, I want to sell 100 shares, and then it'll go ahead and create whatever that stop limit is. Now, this is actually a little less than what I'm willing to sell for, so I actually might have to drop this to closer to 20%, right? Because we're wanting to maybe sell in the $9 range. So I'm saying that if it goes down 20% from its current high right now, then it's going to go ahead and sell at this price point over here at $9.47. But again, it goes into a market order, meaning it can sell for maybe a little bit more or a little bit less, just kind of depends on that as well. But it still helps us out so that way we don't have to sit there and kind of pay attention to all of that. And just like before, you can go ahead and choose how long you want this to go for, whether it's for the day or up to 90 days on that for you as well. If everything looks good, you can click on review here, and it just kind of goes over all of that again for you, and you can click on sell. Now, if you are on the buy side of this, just as a quick example, you can say, hey, if it goes up an additional 20%, I want to go ahead and make sure that we purchase that as well. Now, like I mentioned, we were using Robinhood, so if you want to check them out, the link will be in the show notes down below. But no matter which type of brokerage account you use, you should see all of these or most of these different options for you. Now, there is more to show you when it comes to utilizing your brokerage accounts, and we got you covered here. Check out our next video on screen to keep on learning.